What's going on, everyone? My name's Jose, and have you ever thought about how you're going to pay for your children's college? Well, today I'm going to be diving in a little bit in what a 529 or a UTMA account is for your children. Just remember, before we go ahead and start this video, make sure you smash that like button. Make sure you subscribe for more content like this. You know, we're here breaking the cycle and making sure that our future generations are wealthy and healthy. And also, before we start, I just want to make sure that you know that this is just my opinion and what I think can be beneficial for your children in the future. So what is a 529 or a UTMA account? These accounts are essentially an investment account for your children. So it's all going to be under their name. You're just going to be the one managing it, and you're the one going to be investing in all the stocks, ETFs, or index funds, whatever you think is best for your child. I think these accounts are super beneficial for your children in the future. Just remember, compound interest is on your side on this one. The more you add, the more compound interest that it's going to gain, and it's just interest on top of interest, and that's all money that your children can be using for school or other activities, which I'll dive in this video a little bit later on. All right, let's go ahead and dive in the computer and explain this a little bit further. So a UTMA account is a Uniform Transfers to Minors Act, which allow you to save on behalf of a child for education or any other purpose that benefits the child. So for example, Maya, my daughter, she has a UTMA account instead of a 529 account. So what a 529 account is basically an account that will allow you to expense any qualified educational expenses. So if your child has a 529 account, they cannot use this money for anything else other than educational purposes. So if they use this for anything else, like whatever, you want to use it for something different, buy real estate or something like that, the account will get penalized, unfortunately. So this is one of the main differences between the 529 and the UTMA. The UTMA, you don't have to use it only for educational purposes. You can use it for anything else. For example, hey, you want to buy a house at 20 years old with the money that you have on your UTMA, then so be it, and there will be no penalty. This is the greatest thing about the UTMA. Let's dive into some of these key facts that you have to remember and you have to consider when you open one of these accounts. So let's start ahead with the UTMA. So for the UTMA, as we can see here, it says these are the custodial accounts with assets held in the child's name. So contributions are irrevocable. So what that means is you're adding all the money into this investment account that is under your child's name. So what that means is that you cannot take money out. So please, before you do any type of investment into these accounts, into your child's account, just make sure that this is money that you know for a fact you're not going to use, because you cannot take this money out without a huge penalty, and you definitely don't want to do that. Upon reaching the age of majority, the beneficiary can use the assets for any purposes. So that's either educational or otherwise. Like I explained before, you can buy some real estate if you just think that's the way to go at that point. There is a significant impact on financial aid, because this is no longer going to be assets that are going to be held against the parent. It's actually going to be assets against the child. So it's basically saying that the child at 18 years old, they have, if you put in $25,000 of your own money into their account, that's going to mean that the child has $25,000 of assets, which will automatically decrease the amount of funding that they can get with the financial aid. You can't change beneficiaries, so that means that if it's under your daughter or son's name, then it's gonna be under their name. You can't change it to grandma's name, to your name, nothing like that, unfortunately. Earnings are subject to federal income or capital gains tax, so you guys have to watch out for that. Another key thing that you want to remember is that you can contribute as much as you want, but amounts above $15,000 per year or $30,000 for married couples filing jointly will incur a federal gift tax. So just make sure that you're below that $15,000 if you're single, or the $30,000 if you're married filing jointly. My daughter has her UTMA account with Vanguard. The reason I chose Vanguard is because, first of all, they're an amazing company, very reputable. They've been around for a long time, and I also have many accounts with them. I have a brokerage account with Vanguard, and I have my Roth IRA with Vanguard. So what are some benefits of the 529 account? So that's right, most states let you deduct your 529 plan contributions on your state income tax up to your state's limit. That translates to a higher account balance and lower taxes for you. Remember how we spoke about there's limits on the UTMA until you get taxed, which is that $15,000 limit for single or $30,000 limit for people married and filing jointly. This one doesn't really have a max, and if it does, it's a very large amount of money. So it says increase your education savings by contributing as much as you want. Maximums are usually between $300,000 and $500,000 per beneficiary. So that's like per child. Another one, like I mentioned before, is the financial aid. This one will not count towards your child so much as the UTMA will. So this has a better benefit when it comes down to earning financial aid when your child goes to college. So there you have it. You have the best of both accounts, the UTMA and you have the 529. In my opinion, I think the UTMA is just a little bit more useful because my child can use it anywhere for anything later on in the future. You know, in the future, we don't know what's going to be there, whether it's education, whether it's college. I want her to be able to do anything with this money so that it can benefit her in whatever way she thinks is best. I'm definitely going to be there guiding her and making sure that she makes great investments so that she can also break the cycle of making sure that her future generations are wealthy and healthy. Please make sure you drop a like. Make sure you subscribe for more future updates like this or any other type of advice that I can give you. Also, just make sure that you're researching these topics very well. You know, your kids will benefit in the future from any of these accounts. If you think that your kids are going to go to college later on in the future, I definitely suggest a 529 account. Just make sure you research before you open up any of these accounts. And like always, make sure that you drop that like, subscribe, and I'll catch you guys on the next one. Peace.